Good morning, everyone. I hope you all had a great weekend, but it's time to get back to business. Monday, September 21st. This week's look ahead. First of all, investors are starting to worry about the global economic recovery as COVID-19 cases pass the 30 million worldwide, almost 1 million deaths. And the World Health Organization has warned that coronavirus cases are surging alarmingly in Europe. Winter is coming, schools reopening, fresh new lockdowns around the world may trigger, more selling in the global markets. Israel last Friday enacted a fresh new lockdown measure. The UK is considering it. A lot of countries are also considering such measures, which would be the worst case scenario for economies experiencing a historic expansion following a record contraction. But most governments will do everything they can to avoid this route, given the costs associated with lockdowns. So also last week, the markets were spooked by Federal Reserve Chair Jerome Powell saying that the overall activity remained low and the path ahead remains highly uncertain, he said. So are we back to a bear market? Let's look at the S&P 500 4-hour chart. What are the different scenarios to expect from a technical perspective this coming week? As we can see here, our short entry level, the target was reached at 33.15. Our short entry target, was reached at 33.15. However, we're trying to bounce back up now from this support level. But if we breach this level and break down below it, fresh new selling could reach the 3,200 figure here. The Nasdaq comp is also selling. The futures are selling early this morning, and we're obviously below the 11,000 support level here after tech stocks stumbled last week, and we are now on a near to medium term downtrend with the next support 1,000 points lower at the 200 moving average here around the 10,000 figure. It is important to note, however, that markets are waiting for any breakthrough on a COVID-19 vaccine. So any positive news in that regard will push stocks back higher. The US election, also in November, is likely to impact markets in the coming week. But finally, a big catalyst that could propel US markets higher and also global markets higher are the prospects of further government stimulus. I have to admit, however, that these measures are likely to be on hold until maybe the end of 2020, so after the elections. Brexit is also back on the spotlight after the UK government put forward a bill that would breach part of its previously negotiated divorce agreement with the European Union. That puts a messy break in trade relations back on the table. So let's look at the British pound. The British pound chart here, the daily chart. We're going to try to predict what might happen to the cable this week. As we can see here, after reaching a top at 134.75, the formation of a clear long tail up candle, which usually signals a reversal, a trend reversal. We can see the sell-off here triggered by the Brexit mess all the way to the 200 moving average. However, it looks like we're now trying to bounce back up right here, but I'm afraid that if we don't break or clear the 130 level, new fresh selling might push prices back down to retest the 200 moving average around 127.50. And now a brief look ahead at the trading week. We don't have much today except that Chairman Powell speaks at 5 p.m. Eastern European summertime. Tuesday, we have U.S. existing home sales. On Wednesday, we have Germany consumer confidence for the months of October, then French, German, and UK PMIs, followed by US PMIs, and then the crude oil inventories by the EIA. Thursday, Germany's business climate, as well as US jobless claims and new home sales. Friday, we have UK consumer confidence, and US durable goods data. That's all for the week ahead. On behalf of the Squared Financial team, I wish you all a great week ahead. Bye for now.